How does the framework work? Most of it is fairly straightforward and mainly just using some common sense. But there are some tricky aspects too. But you've already gotten through the trickiest parts already. But in this episode, we'll look at just how the framework and various aspects of it would work, how it would function, and how it would look in operation. And those who choose to be on the right side of history will have the means to get on the right side of history and invest in a safe future. So what if the climate scientists are right? Greater disasters over time. And what if it may even escalate into a world war scale of disaster? How can we deal with such a crisis? And how will the cost of such a war, if it does happen or is happening already, how will that affect the economy? Maybe not even noticeable, but the more we delay, the more likely it's going to become quite noticeable, and we're going to be in danger frequently, perhaps, or mortal danger, or succumbing to dangers. So having people we love hurt and so forth also. So if we tackle it with wisdom in a timely fashion, I believe that it would be quite affordable to stretch out the payments. How would a government compensatory market work? I'm talking about the government setting up a market for dirty assets and essentially buying out some of these assets and retiring them in order to get their emissions offline quickly, but in the meantime keeping the company viable and financially neutral kind of impact on the company. But exactly how would such a compensatory market work? Well, in the insurance business, for instance, insurance policies are not actually an offer by the insurance company to people, which they can then accept that offer. It's actually kind of advertised that there are these tentative policies, and it solicits people to apply to get those policies. And it's actually legally the people who are then through their application making the offer to the insurance companies. And then the insurance company can decide whether it wants to accept that offer or not. Well, in a bit similar way, I think that the government could actually kind of fine-tune the budget, meeting a budget for this kind of program. Say Congress approves that there will be $80 billion in the current year towards retiring dirty assets. and that is the budgeted amount that the government has to aim for then. Well, what the government could do is it creates this list of prioritized dirty assets around the country that it wants to retire and stop the emissions from these things immediately. And what it could do is it would put out a tentative sort of offer to these various companies and say, we will pay what we think is 100% of the market value for this dirty asset and that dirty asset. And it would tell company A, we're making you an offer for this and that and this asset at this and that and this price. Would you possibly be interested if that were the price that we were able to give you for those assets? So it's not actually making the offer, but it is soliciting the company to as to this opportunity for the company to apply to get this compensation for their dirty asset. Now, the government might have a list of 100 dirty assets, and all together they may add up to about the $80 billion that Congress has said they can spend on this. However, when they approach these companies with these tentative prices, maybe only half the companies want to do this. Maybe only a third want to do it. It might be hard to predict. Maybe a seventh would want to do it, or 2/3. So it would be hard to predict and hard to budget how much the government would have to shell out if they all accept it, or if this level accept it or that level accept it. So the companies would inform the government, yes, if this is the price on this and that and this asset, company A would say, we would be willing to retire this first of those 3 assets, but not the other 2 at those prices. So the government gathers this information from all the different companies that it's targeted some of their assets for retirement. And then the government would see, okay, if we go through with these, it adds up to a certain amount of expenditure. Now, if that's way below what Congress is allowing them to spend, maybe they would go to the next 50 prioritized assets on their list. They could do that to see how many of those would respond and want to retire those assets. Or maybe they would say, well, we may have undervalued these assets a bit. Let's make a little better offer on this one and that one and this one. Or they could negotiate with the company and say, well, you're letting us have this one, but not these other 2. What would it take for us to get these other 2? What kind of price are you looking for to retire these other 2 dirty assets we want to retire? And then through a process, back and forth process, eventually the government could fine-tune their offers to a list of highly prioritized dirty assets that they really want to retire, and they could even fine-tune it in a way that it meets Congress's stated budget for the government to spend 80 billion in that particular year on retiring dirty assets, the government could pretty much meet that, fine-tune their offers to meet that expenditure level. So the government could really prioritize dirty assets in a way that is within an approved budgetary limit. And it would be entirely voluntary on the part of the companies. No company would be forced to retire a particular asset that they were determined to keep in business. But many of them hopefully would retire. If the deal is a fair deal, hopefully a lot of very dirty factories or coal or oil at one level of production or another would be brought offline and retired. So how does this work for a company? Say I have a dirty asset and I'm expecting a certain schedule of payments through the years. And let's say it's a dirty asset that's market value, I might estimate is $100 million. And maybe I'm expecting to make $10 million from it for each of the next 15 years, let's say. And say the government comes along and says, we'll give you the market value for this, which we estimate to be $100 million. Or maybe they say, well, we think it's only worth 90 million. And maybe I say, no, I think that's too low. I wouldn't want to sell it to you for 90 million. I'd want 100 million for it. And either up front, I'd want 100 million, or alternatively, you could pay me 10 million for the next 15 years is what I'm expecting to make. And for either of those two deals, I could go for the deal, So, somehow they entice me to want to, they make me a deal that I think is a good deal. And it's going to be even better than what I could make selling it to another coal company or what I could make from the investment, getting the income stream from actually mining that coal field. And I'd be able to profit $15 million a year for 15 years. And the government says we're going to beat that and do even better by you. Well, it could be then that the government and I agree to the stream over the next 15 years or 17 years of 10 million a year, and but it's going to last a little longer than what I was anticipating, or it could be a little quicker. Maybe the government would say we'll give you 12 million a year for the next 10 years instead of the 10 you were expecting to make. So anyway, we negotiate an agreement, and but the agreement includes the stipulation that I will not take that 12 million a year that the government's given me and end up buying a $12 million coal field on the other end of the block and end up making even more emissions than there would have been had I had this coal field. So in operation. So there has to be a stipulation there that money I'm going to not reinvest it, turn right around and put it right back into emissions producing activities. I'm going to go clean with that money. Now, if it's a good deal to me and I'm making more money on it, I might be willing to do that. Plus, if I'm worried that my coal fields are going to lose value in the future or be legislated out of use, that the assets may be stranded and I'm just going to be at a loss. That might be a nice deal for me, even if I'd rather put it back into coal. But, if I put it into clean solar energy, for instance, and maybe the government even offers me help to retrain or free retraining to me of my employees to do the solar work on my new solar investment. Or maybe I buy solar stock, or maybe I buy a little solar company and set them up installing solar energy in the same community and retrain some of those coal miners for doing that instead. And the government might even offer me further incentives to work with the same employees that I've already got under my company umbrella. And then maybe that first year, maybe I invest in solar, that 10 million, and it might be cash that the government would give me that first year. Maybe the second year, I now have some clean business, and maybe I have some clean profits already, and or maybe I'm still investing and it's not profitable yet. And maybe the government forwards me another $10 million and I put it into this clean operation. Maybe the third year, maybe that starts to become profitable. And maybe it makes few million dollars. Maybe it makes enough that there'd be a few million dollars of taxes, and the government forgives me those few million dollars of taxes and gives me another 7 million in cash to invest. And I invest further yet in clean energy or my solar company or whatever. And maybe that fourth year, maybe there are $10 million in taxes that I owe on that clean business, and the government forgives that amount. And that's the amount that or 12 million, say, and maybe that takes care of the government's whole obligation to me for that year, for having retired that coal field, and so forth. If I want cash, then that should have been negotiated with the government up front as part of the deal. But generally speaking, it would be in forgiven taxes unless otherwise negotiated for. And but the government, for a company that has no clean business at all, the government could advance cash so they can get started in clean investing and clean business. If a company already has clean business, then it would just be a matter of forgiving taxes on that clean business. And and this would add up over time with the government's providing through forgiven taxes and possibly cash here and there. And it would all add up to compensate me in a neutral way for the dirty asset that I immediately retired. So in a way, the government is immediately having this big impact on lowering emissions, but it's stretching out the payments for it. And it's helping these companies to gradually transform themselves by retiring maybe some parts of their overall operations year by year. Some companies, it would vary, the experience would vary from company to company, but depending on what's prioritized to have the biggest impact on emissions quickly and yet have the smallest impact on disrupting anybody's life to any extent or disrupting the economy, all that would be minimized and hopefully as much as possible. Regarding the government providing a market for retiring of dirty assets, what is the incentive as a company to participate in this? Well, for one, there is the threat and risk of a worsening climate becoming an all-out crisis. There is also a risk, should the climate crisis grow quite extreme, of future taxes or future carbon pricing being finally legislated in a very strong emergency kind of way. And that could be very depressing to the value of fossil fuel assets. It could lower their prices quite dramatically, or their value, if the crisis grows in a way that the government finally, eventually has to clamp down suddenly or in a big way. So there's a risk of losing value of those assets in the future. There's also a risk of stranded assets. Stranded assets are a term that is bandied about a lot nowadays. And basically, it's if the assets become more costly to exploit because of growing taxes or lawsuits, legal fees, all kinds of possible added expenses. If carbon pricing is finally enacted in a strong way, any number of things could devalue the assets in a way that now it costs more to mine them and drill for them and refine them and whatever, get them to market. It's actually more costly to do all that and legal fees and taxes on top of it maybe than it is worth it to do it. So in other words, you don't profit anymore from it. And then those assets are worthless to you because it's cost more to use them than to let them sit. So they could become stranded in that way, and they're doing your company no good, and you've got all this money tied up, and maybe they're hard to sell at that point too. Maybe you can't even get rid of them at a price that you don't take a huge loss. So there are a lot of risks that participating in transforming yourself to a clean business can help you to avoid. And it would be a way to contribute to world efforts against climate change without a financial loss. If the federal program is to be have equitable neutrality financially, that you're not going to lose, then and they make you a fair offer, a market offer for your dirty asset at this point in time, why not, cash in or trade that dirty asset for clean assets and clean business through the government program? Otherwise, maybe a company might consider selling it to another fossil fuel company. If I had a coal field, say I wanted to give a cash dividend to my stockholders, one way to do that would be to sell that coal field to some other coal company, but then those emissions are still going to end up in the air within the near future. So if the government, maybe sell it to the government. If you can sell it for the same price, why not help the global climate change issue and do that? And then the money be just as good from the government as from another coal company. Say there's a dirty asset that's $500 million, and it's expected to bring in a stream of profit at a certain schedule. That if they are able to have tax forgiveness on a clean investment instead, they retire those dirty assets and they acquire, the government forwards them the money to acquire clean assets in its place, or according to that schedule they acquire clean assets to replace, to the extent where they compensate for the dirty assets. So, in other words, they could have an income stream over the years just as good as that dirty investment, but the government would be uh, providing some good part of that through tax forgiveness on profits. It would effectively make the clean investments much more profitable in the short run. And this would be the incentive to do this, if there's equitable neutrality, that they don't gain in a big way or significant way, but they don't lose either. They come out even. They they get compensated to the point that it pays for the market value of that retired dirty asset. Uh, and and this is a way to help these businesses stay viable and maintain employment levels, hopefully, or retrain the workers. Some funding could be used for the retraining, certainly, and the uh, government would make efforts to have that retraining go as smoothly as possible, maybe into some kind of similar activities, work activities, but that are doing other things. Like, for instance, maybe miners could end up digging for thermal energy, or digging, you know, to house electricity factories under the ground so that thermal energy can be brought up part way, but not all the way up to heat up the atmosphere, but bring them up close to the surface and have an electric factory underground. And then maybe miners could be used to build these electric factories underground or something, or to dig for the sites. Anyway, I think there'd be opportunities for reemploying in comparable work that would allow them to hopefully stay in their own communities, even in a lot of cases. Defense would be defensive environmental funding with equitable neutrality. Nobody's going to get hurt, uh, but they won't gain, but they won't lose. What's the worst that could happen to the government with this kind of scenario of buying up dirty assets, dirty fossil fuel assets? Well, maybe you might say, well, gee, it could turn out that coal can be made clean, or oil can be made clean, and then there would not have really been a reason to do this, or maybe the climate will level out, and all the climate scientists were wrong, and this is not necessary to stop fossil fuels emissions, or lower them drastically in order to have a livable climate. So in that case, in one of these cases, then it was totally unnecessary for the government to do this, and the government's wasted all this money buying up these dirty fossil fuel assets. Well, if the government buys them up, they don't disappear into thin air. The government could have all these coal reserves and oil reserves and so on. And for one thing, it could be in reserve for national defense purposes if ever needed. And for another thing, say they do figure out how to make clean gasoline, or use coal in a clean way, well, the government can sell it back to the market. It can sell it back to private concerns and recoup what it spent on it. So it's not like the government's going to necessarily get stuck on having these things, bought these things, if there is no climate crisis, if there is no war that requires us to suddenly cut out fossil fuel emissions. So there's really no way that the government's going to be completely stuck, most likely, even if the climate scientists are wrong, and even if coal and oil are still going to be viable 40 years from now. So, or 20 years from now or whatever. So that's kind of how I envision the government market could be operated to buy up these assets. Now, what's to keep some fossil fuel company from taking advantage of other people getting out of the business, slowly starting to transform themselves in a serious way, and gradually lowering their fossil fuel commitments and raising their clean energy investments and profits, and clean business investments and profits, if not in energy? What's to keep a fossil fuel company from expanding and trying to take advantage of this situation and it somehow expand its market share and positions, hoping to gain profit out of that? Because if some company is aggressive in that way, then the whole program maybe isn't lowering emissions nearly as much, because you have these companies coming in and trying to expand at the same time. So I think what we would need to do is to, that in exchange for the government to lower your risks and eliminate your risks, in exchange for the government protecting you from stranded assets and devalued assets, I think that the government would have to, and the industry would have to expect that this overall program would, in order to succeed, we would have to prevent expansionism. So in exchange for the government helping fossil fuel companies to transform themselves and avoid all this financial risk, and to actually meet emissions goals of lowering emissions overall, I think that the government must be allowed to prevent expansionistic exploitation of the situation. So I would envision that it would be kind of a bit of a capping. If Exxon, for instance, wants to keep its production going at current levels, then so be it. Let Exxon be at risk for stranded assets in the future and devaluing of its assets and so forth. And maybe they opt to keep turning down government offers, every government offer for dirty assets, and maybe they keep producing at the same level that they're at currently. But if a company comes in and they want to go in fossil fuels in a big way, and they currently have no emissions, but they're entering the business, and they're going to suddenly, their goal is to have a huge amount of business and emissions in so many years. I think that needs to be prevented. And if Exxon wants to greatly expand while everybody else is staying level or transforming to clean and gradually lowering their emissions, then I think Exxon has to be capped as well. So I think, businesses can continue with their current level of dirty business, but I don't think they should be allowed to keep growing dirty business in the face of a looming crisis or a possibly looming crisis. It's just reckless, and it's irresponsible, and it shouldn't be tolerated in the face of a war or a possible war. Maybe there could be an allowance for inflation so that, if a company so chooses, if they feel like they feel like there aren't any options, or their options aren't good, they want to continue in the business at the same level they're at, maybe that should be accommodated. But, and even some growth possibly, but growth of emissions from any company should be highly discouraged by any serious plan to lower emissions. I think that capping that in some way, reasonable way, is something and that should be considered and done, and the industry should work with the government to, the government should solicit their opinion on this, and maybe they have some creative ways to address this. There could be exceptions made also, I would suppose, for a company or a development that is a technical advancement. So if Exxon comes up with a new way to drill for oil that is a better way to drill for oil, somehow it's technically justifiable, then perhaps a joint government and industry committee within the guiding commission of this program could debate whether that qualifies as something that should be allowed to expand within the industry, or whether this new company that has a new way of drilling, that they want to sell it to the established oil companies or something. Maybe they should be allowed to go into business with this thing that will be help the industry. But I think in general, we don't want companies being expansionistic with their emissions. We want to try to have companies staying at their current level of emissions or phasing them out gradually while they transform and have just as good a success financially, but they're transforming to clean business and clean energy. If an oil company is operating at a certain level of emissions, and year by year it acquires so many new oil fields, or say as an investment, sturdy investments, or it does something else, it makes certain level of investments for equipment that leads to dirty emissions. Uh, it should be allowed certainly to maintain its business at its current level. So, but investments, to buy a whole new oil field that's going to double their level of production and emissions, that's expansionism, and that's the kind of thing that we need to cap off, and we don't want expansionism of these emissions with the threat of a war hanging over us, a threat of a climate struggle. Maybe in time that could be lifted, possibly, as we see what the climate does and whether the scientists are correct or not. It's disinvestment progress. It's diversifying investment profits. So instead of being a coal company, you're an energy company instead of just a coal company. Maybe you don't mine a coal field that you previously invested in. You retire that field, perhaps, if the government's willing to make you an offer on it, because it's prioritized for retirement. And say you put that money into solar stock instead. You are disinvesting from the dirty, and you're directly affecting the emissions going up into the air over the next 20 years or so, or 10 years or whatever. And it's diversifying your investment profits. You now have solar profits as well as coal profits. You're an energy company instead of just a coal company, perhaps. Uh, it will also be dip in a sense that you are dipping, like you're dipping your foot into water to test the water. You're dipping into the process. You're dipping of going clean. You're dipping into the progression of the transformation from dirty to clean economy. You're getting a little bit of experience with profiting from clean investments. And actually, this sense of dip, I think, is so important psychologically, I think, because a lot of companies would want to do business as usual. If the government makes them an offer, even if it's a good deal, they may turn it down because they would rather keep doing business as usual. However, I think that the government should mandate that maybe over 5 years or over 7 years or so, that every dirty energy company should have to put maybe 1% of its investments, or maybe a tenth of a percent or a half of a percent or something, in a clean investment, that they must do that small of a part of transforming, just to dip their foot in and test the waters, start to get some experience of profiting from clean investments, seeing that in fact that can be done, starting to get a little bit of staff, or starting to look into those possibilities a little bit, starting to transform their self-concept that, we are a coal company, that, to heck with
with clean investments, we don't do that. That's not who we are. I think if they have to make the tiniest little investment in something clean, but they start making money from it, and then maybe even they start making better money from it than they would have made from the dirty investment, then you've set up a process whereby they start to get look on clean investments differently, and it starts to become more attractive and more of a normal thing to them, and something that they can start transitioning to, all the while having good profits, maintaining their business. Their business is not getting squeezed by taxes. It's not getting squeezed by higher prices on carbon. They're not having their business depressed and becoming less profitable, but they've got strong incentives to start transforming in ways that don't hurt them financially. And the government also could extend that equitable neutrality guarantee to these kind of investments as well. And if you happen to have a prioritized investment, then that would count towards you'd already have fulfilled that requirement for at least some minimal clean investment. So you'd be dipping into the process of transforming, dipping into the progress of an economy, lowering its dirty emissions.
So the framework that I'm presenting herein is very much voluntary, with just the smallest bits of mandatory aspects, one of which would be dipping into clean investments in a small way, very tiny kind of obligation that really shouldn't be too repugnant, because it's not taking money out of your wallet via taxes or fees. It's just saying, we want you to invest in something, make a tiny little part of your investments clean rather than dirty. Dip into getting experience, dip into the process of going clean, dip into the progress of moving towards a clean economy. The other mandatory aspect would be the capping of expansionism, the capping of dirty business at current levels. Basically, you can maintain that business, but we really want you not to be looking to blow that up and expand it in a major way. I would suggest that supporting such an essentially voluntary program of policy and participating in it would largely place your companies on the right side of history, so to speak, and fulfill your responsibilities as to the war against climate change, and would help win the admiration and affection of future generations, including among your own families.